tomorrow morning is the PCE report. It's like the CPI inflation report, except with a few different calculations, and the Federal Reserve actually prioritizes the PCE over the CPI when making their decisions. So tomorrow morning, if the PCE data meets or surpasses expectations, then the market could easily rally. Or it may just be green for a day or a few hours, although Friday is often a wild card day. If you look at SPY around 2020, you notice where the market crash swiftly occurred, and also the recovery to new highs swiftly occurred, and it created a V-shape in the chart pattern. That's why they called it a V-shaped recovery. In this crash, the bear market was very dragged out, and now the apparent turnaround is very slow as well, and that's why they consider this a checkmark recovery. It's actually better to have a drawn-out bear market and a slower recovery, because that means there's more volatility that you can swing trade and more time that you can buy and average down. I pretty much guessed the bottom of the bear market was a few months back, like my videos say. I could be proven wrong later, but it seems that way so far. What should we do then with this information, and also considering that some cynics are starting to change their mind, and the Federal Reserve is about to be done with interest rate hikes, whether or not they pause them first? Well, the statistics and history are clear that you should consistently buy during a bear market, non-stop, average down when you can, and then you're guaranteed to have the most guaranteed and high returns next bull market. But what sort of stock should we pick? I like the idea of a stock like Novamax. It has a lot of potential, but it's also highly speculative. It could easily fail. Then you have others that are speculative, like Beyond Meats and Chewy, that I don't consider a risk at all, despite that fact. Also, you have stocks like AMD or PayPal, which are obviously high quality, and there's no way they're not going to recover. And then you have ones like Ford and AMC that aren't too great or too terrible, but obviously have price targets higher than where they are now. Just don't pick stocks that could go bankrupt, funds that could delist, and also consider reverse split possibilities with penny stocks, and ultimately you'll be fine if you diversify carefully.